Thank you very much. It's my great pleasure to be here with you all this fun afternoon. Of course, I don't have the amazing view Apash was showing you, but of course, I'm from a university city in Cambridge. UK is known for its many world-leading universities and research we're conducting there. Of course, not just Oxford, Cambridge, but UCL, King's College London, but also across the country in Manchester, and in Edinburgh, all across the country. So welcome to have a visit if you can drop by in the UK. So I think Mike and Apash already covered a lot of the things we want to talk about in terms of illustrating UK is a thriving place for fintech and financial innovation. I'm just providing a little bit more data point from a research perspective, because the center that I work with is called the Cambridge Center for Alternative Finance, was founded at the University of Cambridge Judge Business School back in January 2015. And we have really grown together with the UK fintech ecosystem, but also the global fintech market over the last 8 years. Now the largest research center by headcount within the Cambridge Judge Business School. On a yearly basis, we will actually work with around 5,000 fintech firms in 195 countries. And also we advise in terms of the regulation and regulatory innovation with central banks, security regulators, capital markets authorities in 120 countries as well. But our mission really is to create and transfer knowledge addressing emerging gaps in the financial sector in order to support evidence-based decision-making by market participants, regulators, and really the stakeholders. Because I think given fintech is still very much a very nascent industry, it's very much global in nature, there's a lot of development and on a monthly, if not on a weekly basis. So therefore, it's really important to have academia, independent research centers to track the growth and development of those different fintech industries, so can provide top quality, independent, empirical evidence to inform you as entrepreneurs to make your business decisions, but also to advise the government and regulators so they can make evidence-based regulation and policy. So that's why we do exist. Now, in terms of our approach, so we really has been conceptualized, how do we describe and understand and research the evolving global fintech ecosystem? So if you look at the inverted pyramid on the left, we're focusing on the middle, right, which is our actors, activities, and assets, the 3 A's. So that really concerns with the provisioning of digital financial services through alternative channels or instruments or systems. That is digital, right? That is different to the traditional financial market or systems. So we concern the question, for example, what kind of actors, right? Actor can be a fintech, can be incumbents, can be big tech, are offering or facilitating what kind of financial activities, be that of lending or insurance or payments or asset management, leveraging what kind of instrument or asset. Asset can be digital asset, can be special instrument, or can be stablecoin, NFTs, and so on and so forth. That in which jurisdiction? So that's the big picture, right? Who is conducting what kind of activities in which region? And the activities we covered roughly can be categorized into those 14 primary fintech verticals, right? If you look at the core of this very colorful flying view, you can see we have a digital lending, digital capital raising, things like equity-based crowdfunding. Of course, Mike mentioned a lot of new banks, natively digital banks, that's digital banks, digital saving, digital payments, digital asset exchange, digital custody, insurtech, wealth tech, but also a lot of the market provisioning activities. So we cover all of those sectors in 195 countries. But of course, fintech activities do not happen in a vacuum, right? So that's why the elements and ingredients of regulation, supervision, and policy becomes quite pertinent. That's why we also research the global trends, regional trends, and national trends in terms of regulatory innovation, but also supervisory innovation. At the bottom of the pyramid is something we call the digital financial infrastructure. Those are things are fundamentally important for a sustainable, a growing fintech market in any countries. Things like digital identity, cybersecurity, cloud computing, right? Those are the key fundamental infrastructure that we will need to have a thriving fintech ecosystem. And you will find UK actually have a lot of all those ingredients in the right place. Now we move to the next slide. So, in fact, UK, as you know, is the birthplace of fintech pioneers, right? You will see a passion and Mike helpfully to single out some of the fintech unicorns, right? From Revolut, Checkout.com to Wise, and so on and so forth on the right. But of course, UK was the birthplace of Zopa. Zopa was first peer-to-peer market lender, which was founded in London at the heart of the city back in 2005, right? Predates the last financial crisis. Of course, that really ignited the development and innovation, the crossword around peer-to-peer lending, marketplace lending, that is now a global industry, right? Providing vital capital, access to capital to small media enterprises, to individuals around the world. And the UK was also the first place where we have equity-based crowdfunding, right? The leader in equity-based crowdfunding or capital market raising is Crowdcube, was actually not funded in London, but in Essex, right? In Essex, in the far west of the country. And they were the first digital platform in the world that allow retail and sophisticated investors to invest in earlier stage companies, right? But venture capital, but through the crowd and raise the crowd. And that, of course, becomes revolutionary. And then that led to many other forms of crowdfunding platforms and businesses to grow, right? In the UK and in Europe and around the world. Funding Circle was one of the very few fintech companies was able to be public listed in London back in 2018, together with very elite club of the peer-to-peer lenders such as Lending Club and Revolut. So UK has a long history of financial innovation. Now, so how do you keep track, right, of the development of the UK fintech ecosystem? Indeed, Georgia, indeed, for all the rest of the countries. So today, this is a live tool we have developed with the foundational funding from the UK Foreign Commonwealth and Development Office, the FCDO, in fact. So this is a digital tool. You can log on to this today. It's a live tool, right? It's in alpha stage. It's from the ccaf.io, and it's a tool called the Global Fintech Atlas. Right now, it's tracking about 4,100 fintechs across 14 different primary verticals globally. So you know who they are, what sort of activity they are conducting in which country, and how their business model has evolved over time and space. So far in the database, we have nearly 400 UK fintech companies, and you can see the spread over verticals from digital banks, digital lending, digital capital markets, and digital payments. So it's our aim to track how it's been expanding regionally and globally as well, so we can track the footprint of UK fintechs. Of course, we've been working with the Georgia Fintech Association and other industry associations in the region to try to get a more sense of the fintech ecosystem in that part of the world. So looking forward to working with you to provide more visualization about the development and the growth of a different fintech ecosystem. Now, Apache already used this chart, but I will focus on the piece which is really about regulation and policy, right? Both Mike and Apache mentioned that, but it's fundamentally important because we work with about 120 central banks, security regulators around the world. We provide them with empirical data. We advise them on policy and regulation. And whenever we go, right, every single central banker's office or security regulator's office, they always say how they admire the very innovative and pioneering region of the UK in terms of financial innovation. Of course, we all know FCA is held around the world as an innovator. It started its own innovative department, and it was one of the first regulators to start its own sandbox, right, which is a model for financial innovation and regulation around the world. Bank of England, of course, also have its fintech hub, It's a pioneer in many things, digital payment, but also in terms of CBDCs, central bank issued digital currencies. I, together with others, are currently serving on the CBDC's engagement panel with the Bank of England. Policy, very important. If you look at what the Treasury has done in terms of EAS and SEAS, they're providing tax benefits, right? If you're investing in early stage companies through crowdfunding platforms, for example, and also they released Innovate ISA, right? Just for you to get a tax break in your saving products or instruments by supporting fintech, but also provide a very sustainable return. Right? Those are very important policy initiatives. But of course, through the British Business Bank, was a part of the Department for Business and now is independent. The government also used taxpayers' money to directly lend through some of the peer-to-peer lending platform, which is mentioned, through Zopa, RateSetter, and Funding Circle to directly support consumers, but also small and medium enterprises, especially in the northern part of the country. And that's extremely important, not just in terms of providing actual funding for small medium enterprises, but also send a very clear policy signal, right? Those things need to be encouraged. And when the retail investors and institutional investors see a government agency, a British Business Bank, is doing so, that provide a confidence boost, right, to help everyone else to rally around those new innovation and to participate. But of course, as a regulator, they not fair to intervene when there is a market failure or there's a huge upside opportunity. So open banking, which I'm heavily involved with, is such a classic example where the UK's Competition and Market Authority put out an order a few years ago to mandate largest retail banks in the UK to open up their consumer data with adequate protection, but also with consumers' consent. That really gave the rise to the open banking infrastructure that is thriving in the UK, that is world leading, right? But that's started with a regulatory intervention. That started with the CMA order. Now UK open banking system have 6 million active users, right? Large proportion of the population, and cumulatively over 30 million open banking enabled payment has been made in the UK. And last month, in the single month, we had over 1 billion successful API queries through the API. So that's another classic example. But of course, through the excellent work done by the colleagues from FCDO and DIT, we're now promoting that innovation model and attract global talents and business to the UK. Now, let's put some numbers, right? So basically, we talk about fintech, how they have raised large amount of venture funding, they reached the unicorn status, but the measurement of their success and impact, right? The proof is in the pudding, is how they helping real businesses. Are they providing credit, access to finance for consumers? Are they helping small, medium enterprise businesses to grow? Are they help seed and venture stage companies to scale up, right? To get the venture funding they need. So we've been tracking especially the rise of a UK online alternative finance market for the last 11 years, over a decade, right? Focusing on digital lending, which is marketplace lending for consumer, for business, but also for online capital raising, things like equity-based crowdfunding. And you can see the trajectory. It's very clear. Back in 2011, only 300 million pounds, right? Very small nascent industry. And of 2020, it reached the scale of 10 billion pounds a year in terms of amount of funding channeled through an online platform. And you can see the diversity. In the beginning, there's very few fintech market activity types, but by 2020, there's a diverse mix of the fintech models, right? From pension-led funding, debt-based securities, P2P consumer lending, reward-based crowdfunding, real estate crowdfunding, right? So the fintech industry, in terms of online lending and capital raising, is growing in volume, but also growing in diversity and resilience, which is really important. And if you look at how much funding from that big pie, right, a slice and dice and provided to real UK small, media, and enterprises, that number is also huge. From just small sums, tiny sum of 26 million back in 2011. And as of 2020, in the first year of COVID, actually 5.3 billion pounds worth of capital were directly provided to small medium enterprises and to early stage companies in the UK. So that's the evidence that the fintech market is making a real difference, is making a societal economic contribution to the wider UK economy, which is really important. Now, you will say, how big is peer-to-peer market online lending in the context of of the national cross-bank lending to SSEs? How does the fintech channel of access to finance compare with the traditional bank channel, right? So this shows the competitive chart. So as you can see, this blue line marks the cross-lending to small business, to small medium enterprises through the traditional banks, right? And this line depicts the fintech funding, right, from the platforms such as Funding Circle or Resetta or Zopa, right? You will say relatively small number, but back in 2019, before COVID, about 13.9% of gross national lending to SME was provided through online channel, right? Not something to be snared, because that's 13.9 of all lending to SMEs were provided through the online channels. Now, if you look at small business session in the UK, which is any companies have operating revenue less than £2 million, that number has significantly grown, right, to about 34.9%. So that's back in 2019, a quarter of all the vital business finance providing to small business in the UK, they were from the online channels and from the online platforms. Of course, because of COVID, different government COVID relief loan schemes, right, probably diluted that percentage. But you can see the overall trajectory, right, really helping small business to get the funding. Otherwise, they probably couldn't get, right, from the bank. For a lot of those small business owners, those fintech platforms are the lender of last resort, but they need the funding to grow, for working capital, for expansion capital. And as you can see, the fintech funding, the fintech credit are meeting the needs of those small business. Now, look at the venture side in terms of equity-based crowdfunding as a proportion of the entire UK seed and venture stage equity investment over the last 11 years, right? You can see the green line, which is an upward trajectory as well, with the blue line depicting the entire UK venture capital finance industry, which is also on a significant upward trajectory during the same time. But if you look at the seed and venture stage equity investment, equity-based crowdfunding actually occupies around 15% back in 2020, right? Which is significant. So 15% of all seed and venture stage equity crowdfunding, equity investment is from equity-based crowdfunding platforms in the UK, from platforms such as Crowdcube or Seeders or so on and so forth. So another trend we're saying is there is the institutionalization of the funding. So when the retail investors are getting very good return, so the institutional investors such as hedge funds, mutual funds, family offices, and banks themselves see this as a very good investable asset class. That's why if you look at the mix of funding, right, from the retail, which is in orange, and from the institutional, which is in blue, that mix is changing over the last 6 years. So actually by 2020, a majority of the funding on the peer-to-peer lending platform are provided by institutions. Again, a sign of maturity. For equity-based crowdfunding, that case is less so, but still about 15% of funding are provided by institutional investors or business angel themselves, but they're just investing through the crowdfunding platform together with the crowd. So I'm aware of time, I've stopped there, but at the center, we're developing 4 global leading clusters in Cambridge, but we're doing global work, right? Very keen to working with the Georgia fintech stakeholders to further those research and providing more evidence base. So we have a Cambridge Fintech Market Observatory tracking the global fintech market development. We have a particular cluster focusing on regulatory innovation, things like sandbox, digital sandbox, and innovative regulatory regime. And then we have a digital asset program, which is in collaboration with 16 global institutions to understand the climate aspect of digital asset in terms of mining, which I know is a big issue in Georgia. we'll be looking at DeFi, but also the rise of stable coins and CBDC. The last part is important. It's about supervision. It's about supervisory technology, or SupTech, which has got a big funding from the Gates Foundation. And we launched the Cambridge SupTech Lab to provide the rules and the vital knowledge and digital tools for the supervisors around the world so they can better supervise fintech activities, protect the consumers to ensure the industry is growing in a sustainable trajectory. So I will stop there. Thank you very much.